Dear viewers, welcome back to my channel. In this video, a problem is solved on computation of income from other sources. Kindly watch the video till then, like it, share. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is an example on computation of income from other sources. Income from other sources. The problem as follows. Let me stretch here. Mr. Gururaj has furnished the following details of his incomes for the previous year 2019-20. Rupees 1,07% capital investment bonds of government rupees 80,000 10% Karnataka government bonds, then rupees 72,000 10% tax-free commercial securities in the bracket not listed. Next, number 4 here. Sorry, 4 it is. Rupees 40,000 18% tax-free debentures of A Limited in the bracket listed. Next, number 5, winnings from lotteries rupees 10,500 in the bracket net. So he claims the following expenses: interest on loan taken for purchasing securities rupees 1,000. B, collection charges paid to a banker rupees 100. C, expenses for purchase of lottery tickets rupees 400. D, commission paid for purchasing securities rupees 500. So from these details compute the income from other sources for the assessment year 2021. So now let us discuss this problem before we go for solving this here. So the first one, capital investment, interest on capital investment bonds is exempted from tax under section 10 subsection 15. Then interest on Karnataka government bonds is taxable. Then 72,000 10% tax-free commercial securities. So here we need to first calculate the interest. So 10% of 72,000 comes to 7,200, as these are tax-free securities here. So it is to be crossed up here. Interest on such securities is to be crossed up. Similarly, interest on tax-free debentures is to be crossed up, and we need to find out the gross income, that is winnings from lotteries. Then interest on loan taken for purchasing securities is deductible here, because it is expenditure which is connected with the earning of the income, so it is deductible here. Collection charges is also deductible here, whereas the expense for purchase of lottery tickets are not deductible. then commission paid for purchasing securities are not deductible. So now let's go for computation here. So computation of income from other sources. Name of the assessee Mr. Gururaj. So previous year 2019-20, whereas the assessment year 2021. So let me insert the table here. So 3 columns are required here. So particulars, rupees. So the first one, interest on Karnataka government bonds, so which is calculated as 10% of rupees 80,000, so which comes to rupees 8,000. Then the next one here, interest on tax-free commercial securities. So first we should calculate the interest here. So interest equals to so it is given as a 10% of rupees 72,000, which comes to rupees 7,200 rupees 7,200. So therefore gross income equals to net income multiplied by 100. So let me underline here this one. So the rate of TDS on whether it is listed or unlisted, the rate of TDS is 10%. So 100 minus 10, so that comes to 90 here. So now let's substitute the values in this formula, so that we are going to arrive here rupees 7,200 multiplied by 100. So let me underline here to divide this here. So here divided by 90, we are going to arrive here. So that comes to rupees 8,000 again. So 8,000. Then the next one comes here, interest on tax-free debentures of A Limited. So interest equals to, so the rate of interest is 18%. So 18% of rupees 40,000, which equals to rupees again 7,200 only. So therefore gross income equals to net income multiplied by 100. So to divide here, let me underline this one here. So remove the underline. So divide by 90. So now let us substitute in the value, so that we are going to arrive here rupees 7,200 multiplied by 100. Let me underline this one here. So here 90, again we are going to arrive at 8,000 only. So 8,000. Then the next one, we need to calculate the winnings from lotteries. So winnings from lotteries. So here we are given the net here. So again we should find gross income equals to net income multiplied by 100. So to divide here, let me underline this here. So the rate of TDS on a lottery and other casual incomes, it is 30%. So 100 minus 30, 100 minus 30 here, so it will come to 70. So 70 here, 70. So now let me substitute the values here. So therefore we are going to arrive here. We are given 10,500 multiplied by 100. So let me underline here to divide this here. So divided by 70. 7 is 715. So we are going to arrive here rupees 15,000. So 15,000. So now let's take the total here. 8 plus 8, 16, 16 plus 8, 24, 24 plus 15. So 39,000 we are going to arrive here. So gross income, that comes to rupees 39,000 here. Then from this, let's deduct here less deduction under section 57. So interest on loan taken for purchase of securities, that is rupees 1,000. Then similarly, collection charges paid to banker, which is given as rupees 100 here. So 100. So the total deduction here, it comes to 1,100. So 1,100. When we subtract, the result will be income from other sources. So here it will be now 900. So 37,900. 37,900. This is the answer. So let me write a note here. So we should provide all possible notes here. So number 1, the interest on 7% capital investment bonds is exempted from tax under section 10 subsection 15. Next, number 2 here, that is expenses for purchase of lottery tickets and commission paid for purchase of securities are not allowed as deduction. Here. So this is the answer how we need to calculate. So let me make bold here so that it will be more clear here. So this is a very simple problem here. So whenever you find the term of tax free, compulsorily it is to be crossed up. If the amount of investment is given, first you should find out the income, then you need to gross up here. So thank you.